Good afternoon, good evening, good morning. My name is Julie Kurtz. I am a research analyst with the Markets, Trades, and Institutions Division at the International Food Policy Research Institute. And it is my great pleasure as moderator of this session to welcome you to join us. The past couple years have had tremendous challenges for African trade faced with the COVID-19 pandemic, volatile markets for commodities and much transportation, but also very promising opportunities have opened up through the African Continental Free Trade Area and other developments. And we are fortunate to have a tremendous group of speakers here today to share from the 2021 Africa Agricultural Trade Monitor, a publication of Academia 2063 and IFPRI, to tell you more about those challenges and those opportunities. So we welcome you to this session, and I would like to pass to one of the co-editors of this report, Gitau Tedesi.
Oh, thank you, Julie. My name is Gitau Tedesi. I'm the director for Operational Research Department at the Academia 2063, and I'm also the co-editor of this 2021 AATM with Antoine and the chair. I'm very much glad to work with this experienced trade economists. And with this introduction, I will welcome all the participants of this meeting. And then I want to just tell you a little bit about the genesis of the AATM. I think the AATM, which African Agricultural Trade Monitor, is just a response for the growing demand for data and analytics in agricultural trade as a result of emerging policy initiatives in Africa. And the first one is the Malabo Declaration in 2014, which has aimed to triple the African agricultural trade. And then with response to this policy, we started the AATM in 2018. And further, I think recent emerging policy opportunities are coming, like the African Continental Free Trade Area, which also further underscores the importance of the AATMs. And the African, I think this year marks a tremendous progress or development in terms of implementing the African Free Trade Agreement. For example, in February 2021, almost all the 54 countries have signed the agreement, which is very good compared to the initial 44 countries, which were in 2019. And also almost 38 countries, as of August 2021, 38 countries have ratified the agreement. And this is also a good progress. And trade has begun. I mean, the free trade area has already launched on January 1, 2021. So this is a big progress in terms of implementing this one. And as you know, the African Free Trade Area, says that it wants to create a single market for goods and services, which means that it wants to accelerate intra-African agricultural trade and also boost the African trade participation in the global markets. So this in these aspects, I think the agricultural Trade Monitor AATM helps us to track how this affects both the global and the regional trades in terms of agricultural trades. And these are the important aspect of the agricultural trade market for this year. Though we didn't have captured in detail about the impact of this policy because it's being implemented, and further the upcoming other editions will continue to highlight on the importance of the free trade areas. Besides tracking the policies and trade integrations and all these things, AATM is also serving as a platform for collaboration between global and African experts. And it's as you know, it's a collaborative report between Academia 2063, which is a think tank, African-based think tank group, and also IFPRI, which is an international think tank working on food policy research institute. So I think we share expertise and we share data and all these things experience. Besides this we involve AgroDev members. The AgroDev member, for example, for this year edition, for 2021 AATM edition, I think of the 11 authors, almost 8 of them are African experts. From 8 experts, 5 of them or 4 of them that they are AgroDev experts. So this means that this AATM, besides presenting the data and analytics, it also helps us a capacity building platform for African experts. So today, I mean, we're going to present highlights the 2021 AATM, and I think the details of the content and everything will be presented by my colleagues Anthony, and also presented by others. So with this remark, I want to say I'm glad that everybody has come and wants to see what this AATM 2021 report has in it. So with this, I will say that thank you for coming, and I wish you successful presentation for presenters, and also we'll look forward to receive your comments, suggestion from the audience. And thank you, and back to you, Julie.
Thank you so much, Dr. Tedesi. I would like to pass it now to Antoine Bouet, who is a Senior Research Fellow with IFPRI, and also one of our co-editors.
Thank you very much, Julie and Ghetto. I am Antoine Bouet, Senior Research Fellow with the International Food Policy Research Institute. Let me tell you that's a pleasure to present the 2021 AATM report. We have been working a lot on this report, and I would like to thank the fantastic editorial and coordination team. They have been great, efficient, and very reactive, so it has been a pleasure. But I would like also to thank the authors who are not only competent, because you will see by reading the report that they are very skilled in economics, but they have been very patient because it has been a very long process. And you will see it with Leiza Matissal, Abdullah Isek, and Leila Baghdadi, who are 3 of the African authors of the AATM 2021. I would like to talk a little bit about methodology and data, because to monitor trade in agriculture, the AATM relies heavily on trade statistics. And these statistics are, of course, fundamental for good policy recommendation. For example, to establish food balance sheets, we need production and consumption, but also exports and imports. What matters here is not only the accuracy of this data, but also the fact that they are quickly available, and it's not always the case. So, for example, in 2021, it's not very useful to get only the data for 2018 or 2019. We need data for 2021. And this is really a problem. And of course, quality and timeliness is important. So the problems with African trade statistics is that official international trade statistics are often inaccurate. They do not include what we call informal trade, which is either trade by by individuals in small quantities, often women, but also it's smuggling, or it can be also trade by companies that have an agreement with the custom officials. And so it's a big phenomenon, very important phenomenon in Africa. And so the official statistic miss this informal trade. So what do we do in this report? First, we established a high quality database. It means that we take the ComTrade database, which is the United Nations Commodity Trade Statistics database. And these whole trade data are statistically treated, and they are processed, and they give a new and more accurate estimate of cross-border trade. And this is a database which has been at the basis of almost all statistics and graphs in this report. But it's not sufficient. We also rely on many initiatives in Africa that try to measure informal trade, but also formal trade. And it's essential because we want not only to improve the quality of the measurements of trade, but also we want to have recent data. And for example, it was very important during for this report to have a good estimations of what happens on the ground, to have recent data, and in particular trade in 2020, because it was the period of where Africa was affected by the pandemic. And we saw, in fact, during this period, a lot of initiatives that have emerged to provide real-time tracking of the health and economic crisis, number of infection, number of deaths, economic activity through cellular or satellite data. And it's really important that in trade, we have to improve the quality of what we have. It's not today sufficient. So in this report, we have tried to work with this big database that proceeded to with the statistical treatment of the United Nations Comtrade. But what we have done is that we have also tried to rely on the sources of measurement of trade in Africa, in Burkina Faso with SEALS, in Eastern Africa with FSNWG, and in Uganda with UBOS. And it's really important because, for example, concerning the pandemic, we have seen that in 2020, we had a substantial reduction of formal trade, but a collapse of informal trade, which is, of course, very important from a political point of view. So the quality of agricultural data must be improved in Africa. I really hope that the international community will work in these directions in the very near future. Thank you for your attention. Julie?
Thank you so much, Dr. Boued. Just a reminder to all of our audience that we would like to hear from you. And so to participate in the Q&A session that will follow the presenter remarks, you can submit your questions at ifpri.org through Facebook, LinkedIn, YouTube, or also by using the hashtag AskIfPri on Twitter. So to launch with our presenting speakers, several of the co-authors from the Agricultural Trade Monitor, Africa Agricultural Trade Monitor, we'll start with Leisa Saul, who is a scientist with Academia 2063. Leisa?
Thank you very much, Jolie, for the introduction. I'm Leisa Saul, Associate Scientist at Academia 2063, and I'm going quickly to present the main highlight of Chapter 2 that I co-authored with Professor Antoine Bouet, which was on the participation of Africa to global agricultural trade. So this presentation focuses on 2 points of the report in the next slide. The first one is related to the trends in African trade in agricultural goods, and then we will talk about the trade in resources. In the next slide, we focus on both aggregate and sectoral levels of participation of Africa, and this in order to offer the richest perspective for understanding the place of the continent. Our analysis covers 8 groups of products or sectors, which are listed here. And in the first graph related to export, we see that the participation of Africa has been rather stable with a flat trend for most of the sectors, and this especially for the last 5 and 6 years. The share of the continent is higher for cacao, which is above 20%, and then we can find coffee, tobacco, and oilseeds. On the import side, in the second graph, the share in global imports is higher for cereals, where a significant increase is apparent from 2003 to 2011. And in all sectors except tobacco, Africa stabilized from 2011 to 2019. And globally, even if trade is increasing in value, Africa is still to grow its global trade position. In the next slide, we look at measures of reviewed comparative advantage in each group, and the relative share of unprocessed, semi-processed, and processed goods with RCA is presented here. Processed and semi-processed goods are getting more competitive for most of sectors, and the share has fallen in plants and coffee at the processed stage. But when it comes to the semi-processed level, only a minimal decrease. The share for all other groups increases, and this up to 20% for processed tobacco. For unprocessed goods, as we would like it to be, we have a decrease in all groups except in the one for oilseed. In the next slide, the report looked at also how African countries are diversifying into higher value products. And this we use a characterization of all countries according to a diagram defined by the number of competitive products or diversification and the number of country competitive in a product or ubiquity. We are expecting countries to move from Group B to Group C to produce many higher value products. In the next slide, findings show that African countries were mainly diversified and their exports were concentrated in standard commodities for which many countries are competitive. And over time, we see that countries have moved from exporting standard products to exporting exclusive products. And as example, during the period 2017 and 2019, we see that 46 countries are now exporting few higher value exports compared to 18 in the first period. And in this classification, only South Africa and Egypt achieved to export many competitive and higher value exports. In the next slide, the chapter look at also the resources embedded in African agricultural trade flows compared with other regions. And the focus in this presentation will be on fertilizer. However, we have much more on pesticide, on labor, and water content in the chapter. With regard to fertilizer, we saw that Africa relies on fertilizer imports with a dependency ratio above 178%. Global trade in fertilizer, when we look at the different nutrients, increase mainly in the two periods into consideration, and this can be up to 7 percentage points for nitrogen export and then 38 percentage points for potassium imports. So before I sum up, let me just say that this chapter has also an interesting estimation of calorie content in agricultural trade, and we have also provided an estimation of ad valorem equivalent of non-tariff measures imposed by African countries, but also faced by African countries. In conclusion, with regard to the overview of agricultural trade, in the next slide, please, we can see that Africa is still to grow its global trade position, and the continent does not reach its potential due to several factors that may be domestic causes or trade policy related causes. And we see also that the continent, the countries generally have comparative advantage in the early stage of production and the unprocessed and the semi-processed stage. One thing we come up is governments have much more greater potential to address the internal factors related to domestic causes than external factors. And internal factors, therefore, should be a very high priority in the national agendas. Finally, we said that a successful AfCFTA implementation that can address both tariff and non-tariff measures that are still constraining intra-Africa trade in Africa could make easier the business to trade within the continent. So I'm going to stop here, Julie, and thank you for your attention.
Thank you so much, Lisa, for your remarks. I will pass it now to Abdoulaye Seck, who is a professor of economics at the University Cheikh Anta Diop in Senegal.
All right, thank you very much, Julie. Hopefully you can hear me very well. So greetings to all. My name is Abdoulaye Seck, professor of economics here at Cheikh Anta Diop University in Dakar, Senegal. So it's a pleasure being part of this very exciting activity that brought you this new report. So what we're trying to do in this chapter, which is chapter 5, is to look at the impact of COVID-19 in Africa, not only from a growth perspective, but also from a trade perspective, and also seeing the impact on food security and also poverty. So let me start with a very quick background. So we all know that when it comes to the health impact Africa has been relatively less affected compared to other parts of the world. But economy-wise, the continent has suffered a lot, along with the other part of Africa. And as this is the case, we see some heterogeneity in those impacts. For example, for some sectors, the impact was very, very large. For example, if you look at the energy sector and also the tourism sector. But when it comes to agriculture, we see that the demand tends to be relatively stable. But when we see what's going on in terms of trade costs and also the measure that have been taken by many governments in terms of border closure, so the impact on agricultural trade, especially intra-African trade, tends to be relatively large. Now, let's first look at what those policy responses are, especially those at the border. For example, when we look at those African countries that close their borders, so generally the number has increased over time. But if you look at a given time, the total number of African countries that have shut their borders, so it wasn't more than 80. And if you look at it differently, for example, the share of global trade in calories affected by this restriction, at the peak, it tends to be around 5 to 6%. Now, let's talk about some of the transmission mechanism we looked into this chapter. One is, if you look at the African trade position, which tend to be very vulnerable. For example, we see that raw materials tend to occupy a very large share of export revenues, but also the deficits we have when it comes to trade in goods tend to be financed by important revenues we get from tourism, remittances, and also international aid. And the fact is that these three tend to be relatively important when it comes to the African balance of payment. It means when we have this global pandemic, which has reduced tourism, remittances, and also international aid, so the impact is expected to be relatively large, as we will see later. Now, another channel through which the pandemic has impacted Africa is simply by looking into the price of those major commodities that Africa tend either to produce and export or maybe to import. And what we see here is we have various impacts here. For example, for some major commodities like gold and uranium, what we see, and also cocoa beans, coffee, and sorghum. So for these products, the price tend to increase, and which means that countries that depend on those for their export tend to benefit from these increases. But on the other side, for countries that are net importers, they tend to be hurt. And also there are some commodities for which their price have decreased, and for countries that rely on those commodities for their export revenues, they tend also to be very hurt. For example, when you look at the case of cotton, which price has decreases, so countries such as Benin, Cote d'Ivoire, Burkina Faso, and other countries tend to suffer a lot from this price drop. And another channel which is related to the first one, to the previous one, is when we look at the terms of trade. So if you're a country that depends mainly on a commodity for your export, which price has decreased, so definitely your terms of trade will deteriorate. This is the case, for example, for countries that are at the bottom here, like Angola, Somalia, and Equatorial Guinea. And for other countries that either reduce their import or maybe have benefited from increase in the main commodities they have in the export basket, so those countries tend to gain. This is the case, for example, for Burkina Faso, Tanzania, Uganda, and Cabo Verde. And also related to the first two channels is real exchange rate. And what we see here in, we have different fortunes here across Africa. For some countries, we see some depreciation of the real exchange rate as a result of price change, but also as a result of falling remittances and tourism receipt and also revenues they get from oil and energy export. So which means the direct impact would be a reduction in the real exchange rate or the price competitiveness of many sectors. And but some, if you're a local producer, you tend to benefit from it because you have increased price competitiveness. But if you're importing those goods and you have your real exchange rate that deteriorates, definitely it's not a good news for you. And this is the case, for example, when we look at food insecurity for countries that import food product, which price tend to be relatively high. But we also have some countries which see some real exchange rate that has been very stable. And this is the case, for example, for Burundi, Liberia, Madagascar, Tanzania, Uganda. Now, what those countries, the fact is that the real exchange rate has been stable is due to the import that have been reduced during this pandemic season. And also, another important channel through which the global pandemic has impacted the African economy, especially trade, is simply by looking into trade costs. So it is generally the case that most of our export of perishable goods are cargo on passenger flights. Now, what we see from March 2020 to May 20, we see an increase in air freight rate, which has a negative impact on our export to those countries. Now, these are the main channels we look through to see how the pandemic has impacted Africa in general, especially when we look at the trade component. And now, what are those impacts? So for example, when we look at the trade volume, worldwide, we had an unprecedented decline in global trade, and Africa has experienced a decline which is larger than the global average. And if you look at within Africa, the northern and southern part are the part that tend to be much more impacted. But as Antoine has pointed out, it's been a challenge to look at some component of trade, which is agricultural trade, because of data. But we still have some data for sales countries and also for East Africa, which generally show a decline in trade. And we also conducted some CGE modeling, some simulation. And basically, we've come up with some results in terms of how growth has been impacted, and also how the agricultural sector has been impacted. But also we look at the impact on extreme poverty. And here you have some figures based on some scenarios we developed not only on April 2020, but also in September. And that's where we get more updated data. And here we have a different perspective here. We look at what's going on a house, from household perspective. And generally we come up with income losses, which tend to be around 5 to 10% of monthly GDP. And also the number of people who has lost income as a result of the pandemic. We look at the impact on poverty and also the number of people who have fallen into poverty. We look at the impact of inequality and also what is needed in terms of fiscal expenses for the government to tackle, to revert the impact. And let me finish with maybe some of the policy implications. So definitely we need
Professor Sek, I want to jump in just because we have a few other speakers and I want to make sure that we get time to them. So I will leave these up on the screen so that everyone can see them and hopefully read them briefly. And I want to thank you so much. It's so important to get some of these macroeconomic perspectives and help us narrow down into how they have these impacts more at a regional level. So thank you so much for your words. I'm going to pass it now to our next author speaker. Leila Baghdadi is a professor of economics at ESSEC, the University of Tunis. Leila?
Thank you very much, Julie. First, let me thank the editors of the AATM and also the team of the AATM for inviting me to contribute to this important report. I contributed with a chapter with colleagues and friends, Zuhur Karay from the University of Tunis and Shahir Zaki from Cairo University, and present today in this panel. Our chapter is about the Arab-Maghreb Union, regionalization without integration. And the AMU is composed of 5 countries: Algeria, Libya, Mauritania, Morocco, and Tunisia. They are, they occupy a large area on the South Mediterranean Sea, with on their North European countries developed and very dynamic economies. On their South African dynamic also and emerging African countries, they had common cultural heritage, a common language, sometimes common institutions, but still they are different in many aspects in terms of economic, political structures, but also in terms of resources. They face some common threats, like, for instance, climate change, water scarcity, terrorism, political instability. The MOU was established in 1989 with the aim to foster growth and dialogue. They foreseen several steps in order to have this integration. First, a dismantlement of tariffs and non-tariff barriers, then a customs union, and finally a free movement of factors of production. The MOU didn't meet its objectives and aim, and today I will tell you why. At least some reasons. Then first, let's go through the AMU trade. Not everything, but just some hints. First, the contribution to the agriculture of the economies in AMU countries is lower compared to manufacturing and services. Again, there are some differences and some heterogeneity. For instance, the contribution of agriculture to the Mauritanian economy is about 19.1%. However, Libya the contribution of agriculture to GDP is about 2.7%. When you look to the measures in terms of food security, we can say these economies are food secure, but they are, let's say, they have poor performance in terms of resilience, and in terms of food resilience and food availability. Then, second fact about AMU countries is that they are trade more with European countries, which is their main partners, than within the AMU and with African countries. And this is true for either agricultural or non-agricultural product, as you can see. Then, for instance, here, exports with Europe is really, higher compared to the other exports to countries in blue or in orange with exports to Africa. Same things for non-agricultural product with Europe is much more than with other AMU countries. Why the AMU didn't achieve its objectives? There are many reasons. Today, I will just, underline or highlight 5 reasons. First, with the AMU agreements, AMU countries signed several other agreements, bilateral, regional, within Africa and outside of Africa. And they ended up by having a diversion of trade from AMU, rather than fostering trade as they first intended. Second, even if one of the first steps envisioned, which is dropping of tariffs and non-tariff barriers, actually tariffs still exist. They are still there, and tariffs are higher on the agricultural sector than on the non-agricultural sector. There still exists, even if, again, we have some heterogeneity, lower 1.2% in Nigeria, but 16.2% in Mauritania, for instance. Non-tariff barriers are still there, and they are prevalent, especially in the imports. Then on the exports, we can see it for all AMU countries. They're more or less like the average world. Maybe we even have seen a rise in the last decades, replacing other tariff barriers. And fourth, these are for the trade policy issues. For the trade facilitation and behind the border, there is still a lot to be improved. For instance, AMU countries display the lowest connectivity in the world. And surprisingly, they are much better connected to European countries than within AMU. They also have the highest cost to trade of the world, and they have poor quality of ports and railroads. there is some exceptional performer here. Morocco stands out of the court with a lot of improvement during the last decades. Fifth reasons, domestic institutions matter a lot for trade integration. And there is still a lot to do here. For instance, corruption is higher in AMU countries than, for instance, MENA countries. The respect of property law is also lower in AMU than in MENA or, of course, US or European Union. There is a higher level of market dominance in these economies, higher than, for instance, MENA countries, and still to do a lot to combat monopoly practices in these countries. All of this makes, of course, didn't achieve its objectives, and we can at least drop here 3 recommendations. For instance, we need a common vision for the agri-food sectors to drive AMU's integration, to lower common risks of water scarcity and climate change, and to ensure food security. One of the failure, or how it worked till now, it's top-down approach, and maybe moving from this top-down approach to an approach where you have a platform with private and public stakeholders could work better. Then to foster regional integration, you don't only need trade policy, but you need a different set. You need other sets of policies, agricultural, industrial, and competition policies to make it work. And third, we cannot think about trade and moving one good from one place to another without having a good transport infrastructure in place and a good connectivity.
Thank you so much, Leila. And with that, I want to transfer to the next portion of our event today. So we have 2 wonderful discussants to respond to what they've heard by the presenters, as well as the report overall. I'll mention too, Leila Baghdadi presented about AMU. Each year, the Agricultural Trade Monitor focuses on a different region of Africa. So I think next year will be with ECAS. So this is really a chance for us to hone in on a region and see some of these more these impacts from a closer view. So, and just a reminder to all of our audience that we do want to hear from you. And so we encourage you to participate in the Q&A session immediately following the discussants. And so you can submit your questions on ifpre.org or via Facebook, LinkedIn, YouTube, or on Twitter using the hashtag AskIfPre. So we look forward to your questions rolling in. So with that, I want to present our first discussant. Doa Abdel Motal is a senior counselor at the World Trade Organization. So I will pass it to you, Doa.
Thank you very much, Julie. It's wonderful to be part of this event. Congratulations to the organizations that have supported this latest edition of the Agriculture Trade Monitor, and congratulations to all the authors who are with us today. I think the monitor gives us more information about what is happening in Africa. So, I think it's a very valuable source of information, very valuable source of data. And I think we now need to focus on what we are going to do with this picture that the monitor paints. Clearly, Africa is the continent that has the least amount of regional integration. So in terms of intra-regional trade, Europe, 70% of Europe's trade is with Europe. 60% of Asia's trade is with Asia. 50% of America's trade is with America. But Africa is only at 22%, and that's all international trade. Food is an even smaller part of that picture. And as the previous presenter just said, the cost of trade in Africa is the highest in the world. So we need to address these things. And of course, the report goes into other things. And as have, a lot of the speakers mentioned, lack of diversity of exports and export markets, etc. Now, I think there's a whole menu of issues that we need to be thinking about that I want to flag as a discussant. First of all, is the willingness of Africa to integrate with Africa. We now have the African Continental Free Trade Agreement, which is a very promising initiative, but it remains to be seen whether it will succeed in breaking the silos of the regional economic communities. We need to slash trade barriers, as has been said many times before, within Africa. So trade barriers by Africa for Africa. And there needs to be a greater harmonization of non-tariff barriers within Africa. And there have been many calculations made, including studies in the wake of the African Continental Free Trade Agreement, that have demonstrated just how serious these NTBs are and how much they cost to the actual trader. There's a need to improve infrastructure in Africa so that food and people can travel more easily. And there's a need for research and development, obviously. And there's a lot of scope for South-South cooperation, because a lot of other developing countries in different parts of the world have actually become research and development powerhouses. And I think there's a lot that Africa can learn by exchanging information there on those issues. Now, there is no doubt that this agriculture agenda, which consists of the willingness to integrate, slashing trade barriers in the NTB's infrastructure, R&D, all of that requires investment. And in my opinion, the best way for Africa to attract investment is to demonstrate that Africa is a safe place to put money, to put time and money. And to do that, Africa needs to show that it is a good global player. Now, the good news on the WTO front is that Africa doesn't need to wait for WTO negotiations. Yes, there are ongoing agriculture negotiations, but what is more important, I think, is to implement existing rules and show that that implementation is going well. The entire rule book, whether from industrial goods to agricultural goods to intellectual property to services, because all of that is linked to agricultural trade. So just Africa demonstrating that it is a good player in locking in reforms and using the African Continental Free Trade Agreement as an opportunity to do so is key. Now, within the agriculture negotiations in the WTO, there is scope for the African group to have a stronger, I believe, offensive agenda. Right now, it is focusing mostly on domestic support, and it has a big defensive agenda consisting of a special safeguard, food stocks, of S&D, etc. But on the offensive side, it is offensive on domestic support and cotton. But where I think Africa really needs to focus and what needs to be a priority area is the issue of tariff escalation. A lot of the primary commodities that are exported by Africa are slapped with higher tariffs as soon as they are even minimally processed. And chocolate is a case in point. From the cocoa to the chocolate, the tariffs rise dramatically. So those are just some elements for our discussion, and I'll stop here to allow time for the next discussant. Thank you very much, Julie.
Thank you, Doa, so much for those comments. It's really wonderful to get that broad perspective, and especially from your seat there at the WTO. So thank you so much. I will pass it now to our second discussant. And just a reminder, after we hear from Dr. Johan Christian, we will dive into our Q&A session. So please put those questions in at ifpri.org, on Facebook, LinkedIn, YouTube, or with the hashtag AskIfPri. So Johan Christian is the director at the Bureau for Economic Research at Stellenbosch University in South Africa. Johan?
Thank you, Julie, and thank you to the speakers and also the previous discussant. Doa, I think you've read my mind, all my notes, because you've almost said the same things that I wanted to say. But I also want to congratulate the team for putting this together. It's very good to have such a detailed report on African trade and African agricultural trade. I remember the days when this was initiated back in the days of the first meetings of AgriDep. Antoine, we go a long way back, so it's good to see that these things come into fruition eventually. But it's still, I think, a very ambitious project, you know, given all the points that Antoine made earlier about data issues, etc. And I want to latch on that just now, but also just to highlight, I think Africa remains difficult to analyze because it's so diverse and it's very difficult to generalize. You know, what happens in Southern Africa differs so much from what happens in West Africa and in East Africa. There are similarities, but the whole nature of institutions and infrastructure dimensions are so completely different that sometimes you find it difficult to have a pattern that goes across and explain across the continent itself. I think what is also something worth highlighting, and I'm glad the report mentioned that, and Doha also raised this issue, that the success of the African Continental Free Trade Agreement will definitely depend not only on the tariff issues, but definitely on the non-tariff measures. Now, this is something that where political will be necessary, something where we need to have engagement with the countries to illustrate that there's an ability to actually trade with one another to eventually ensure that there's a free flow of goods. So the non-tariff measure issues, intra-Africa is very important, but also for exports into Europe and the US. This is something that is bothering me. I've worked on several products where the trade is just completely closed as a result of sanitary issues or animal disease issues, you know, which sometimes is misinterpreted, misdirected, and not really dealing with the disease issues itself. So I think this is something that we need to highlight and we need to deal with substantively. I want to conclude my remarks with the points that Antoine made about the data issues. I think this is an issue that remains a big worry. The report does refer to the data issues, but in essence, I think it is a concern that we all know how data gets reported and that data inaccuracies can lead to false interpretations within any report of this nature. You already mentioned the issue of the fact that data on informal trade is not generally available. There was initially some projects that we had in Africa to monitor the cross-border trade informally, but whether those things are captured continuously and reported and factored into the databases is something that we need to understand. But more importantly, some of the results are intuitively not making sense to me if I look at the things in the continent, and it relates to the issues of origin and production, because there's an interesting example in one of the tables or one of the sections where South Africa is a large rice exporter, and there's a major trade between South Africa and Botswana and rice, and we all know that South Africa does not produce 1 grain of rice. So I want to encourage the team to really start understanding the production dimensions of agriculture in various countries and link that to the trade dimensions so that you can that the sort of interpretation of the data will not bring about counterintuitive results. The same deals with the same problems I picked up with the calorie content of trade, which presented weird results, and also the livestock trade, and it all deals with the problems with unit of analysis, whether you work with values, whether you work with volume. So that is something that we really need to deal with, you know, and I would like to encourage the researchers to really focus on the production capacity and the production records and statistics of the various countries to be able to make sense of the trade, because there's lots of imports that are re-exported across the continent. Then lastly, future research topics. Doha has also mentioned some important issues that one can engage in future reports. The cost of trade is a main issue, and therefore one needs to think about infrastructure that support trade, thinking about border crossing times, and also think about the harmonization of documentation, which I think is a fundamental process as part of this African Continental Free Trade Agreement. So it will be useful to have these sort of qualitative assessments to help understand how ready is Africa for expanding its intra-Africa trade. Thank you very much.
Thank you so much, Dr. Christian. With that, I would like to invite all of our speakers to come back on and join us for our Q&A session. That also includes our final editor from the editorial team of the Agricultural Trade Monitor, Shahir Zaki, who is a professor at Cairo University. And so just to launch our Q&A session, we had many questions about the AfCFTA, the Agricultural Continental Free Trade Area, and so just some of the specifics about that. We had a question from Biniam Kasa. Can regional sectoral specialization work for Africa under the AfCFTA? For instance, East Africa for coffee value, West Africa for fruits and cassava. And there were questions too about, will it have a significant impact on specifically for enhancing a lower vegetable price between African countries, especially in Ethiopia and in East Africa? So I'm going to pose this question first to Gatau and Doa, and just open it up to, because I know that a lot of our speakers could step in on this. So first, Gatau.
Okay, thank you, Julie. I think the impact of this the African Continental Free Trade Agreement. I think theoretically we expect a lot of changes in terms of reduction of prices, because I think the main thing theoretically, that means the market becomes bigger for every commodities, so that when the market becomes bigger, and then the price may go down or it may go up for some products, because the market constitutes on demand plus supplies. But we expect in general that the volatility of the price will decline even for vegetables and also other commodities. So definitely we'll expect those positive changes. But this is theoretically, and we remain to see the empirical aspect of it. But in terms of this clustering of the commodities by regions and all these things, I think yes, there should be some sort of specialization, I mean, in terms of competitive advantage for different regions on different products. I think in the first edition of the AATM in 2018, we did some analysis on those things, how the competitiveness varies across different crops and all these things. So definitely based on the competitiveness, I think the market itself may create those clusters. That's my assumption. But I mean, in terms of policy support and in terms of the implementation of the Continental Free Trade Agreement, and that should also, they will also consider those potentials, competitive advantage, so that they will have some clustering aspect of specialization on different commodities. That's the expectation, and I think we remain to see those things. I think this is what I can say, but I would have loved to appreciate the discussants that they told us a lot of information and a lot of insights for our ATM to improve. Thank you, ATM. Julie, back to you.
Thank you, Gatau. Doa, would you also like to jump in on that question?
Sure. To come in very quickly, I think the answer, not surprisingly, depends on how strong the rules will be of the African Continental Trade Agreement, how liberalizing they will be, how good the implementation is going to be of those rules, and whether non-tariff barriers to trade are going to be addressed in a serious fashion. That's on the one side. On the other side is infrastructure, because you can have the best African Continental Free Trade Agreement that there is, but if you don't have the roads on which to move the food, if you don't have the railways, if you don't have the flights, if you don't have any of that, or just a very small portion of the transportation links that you actually need, then the cost of trade is likely to remain high. So it's going to depend on a lot of things, but I hope that the negotiations that are still ongoing in some areas will go deep into the problems and not address them superficially.
Thank you, Doa. And I also like to invite Antoine Bouet to jump in on this question.
No, I just wanted to respond to Johan, and I would like to thank Doha and Johan for their very important remarks first. And as Doha and Johan mentioned, I think that the big issue concerning the potential success of the AfCFTA is addressing the NTM, non-tariff measure issue. So this is really important. And what the report shows is that NTMs are a big issue concerning trade barriers in Africa. And I would like to say that the point raised by Johan is very important. So it looks like we had the problems with statistics coming from Comtrade concerning exports of rice from South Africa. I'm not surprised because to be honest, concerning Chapter 4, which focuses on value chains, specific value chains, we had big problems with the livestock sector because it was this year it was about the livestock sector. And when we sent the first versions of this chapter to the reviewers who are experts of this sector, we had big problems because they disagree with what we were saying about what happens in the livestock sector. So we redo completely this chapter, and we base the chapter on many unofficial or trade databases like the Food Security and Nutrition Working Group or the SEALS database in West Africa, and so the second versions of the paper was much better. So it's very difficult, you know, to do that because we have 55 countries, and of course, what you suggest to check the trade data with the production data is really important, but it's difficult to do it systematically for 55 countries and for so many commodities. But this is a way that we have to explore, of course. And this is just to mention that I think that the issue of the quality of agricultural trade data in Africa is really a big issue, not only in terms of accuracy, but also in terms of timeliness. Thank you very much.
Thank you so much. Thank you so much. So I would like to expand now from focusing on intra-African trade to look at the global picture. And so our discussants mentioned some of these things that are inhibiting global trade or hitting more processed goods globally with higher tariffs. And so I wanted to turn this question to Leila. To Leisa, because you mentioned that the overall African participation in global trade is fairly low, and so was wondering, just from your analysis in that chapter, what are some of the main determinants of the relatively low participation of Africa to world agricultural trade?
All right, thank you, Jolie, for this question. I think from our analysis, the low participation of Africa can be explained both by domestic causes that I mentioned and by trade policy causes. And on domestic causes, we talk about the low consumption of fertilizer, but also we can see that the unskilled labor content of agricultural trade. So labor content for Africa is mainly unskilled compared to other countries. We have also public research, public agricultural expenditure, and also research and development spending, which is quite insufficient in most of African countries. And this can we can find the low infrastructure that could enable local sectors to meet some standard international requirements. And what we see also is sanitary and phytosanitary barriers faced by African countries that are very damaging for Africa, and especially for the most important sectors like cocoa, like fruits and vegetables, etc. The discussion talk also about the high tariff on Africa agricultural trade, and this is also one of the main causes of our performance. So yeah, this is what I can share. Thank you.
Thank you so much. I want to sort of expand that question to also thinking about the international livestock trade and pass this to Shahir Zaki. If you have anything to add on what is holding African trade back in the livestock sector globally.
Well, thank you, Julie, and I just want to thank all the editors and participants of the AATM 2021. So regarding the livestock trade, actually, I had the pleasure to co-author the chapter, this chapter with Julie and Lulit. And as Antoine mentioned in the beginning, it was very hard to look at, to use, the formal published data, because many of the data that, a lot of the flows are informal. So, and actually what we found in the chapter, that what really holds back the trade in livestock, I think we can mainly summarize this in three main parts. So first, as it was mentioned by the discussants, sanitary and phytosanitary measures are clearly one of the most important trade impediments that still hinder trade in livestock. Bearing in mind that most of the African countries, they benefit from a preferential scheme, either through the everything but arms in Europe or the AGOA in the United States. But despite that, it's very difficult to access these markets because of sanitary and phytosanitary measures. And second, because also partially of the domestic support that is provided by advanced economies to the domestic farmers or domestic producers in the destination economies. And third, one of the things also that we found in this chapter is that most of the trade that is being done by African countries in livestock is mainly, I would say, unprocessed or live animals, not really processed food. And that's why the value added, as a consequence, is very low, which makes African countries really not able to access different markets. So I think upgrading this value chain and increasing the value added to the products that are being exported by African countries will definitely help them export more from the livestock sector, especially, the three sectors that we analyzed, which are dairy products, poultry, and so that's in a nutshell what I think holds back trade in livestock. Thank you, Julie.
Thank you so much, Shahir. I want to pose this question to our discussants, but this is more focusing on some of the standardization and some of the marketing even of food products from Africa. So this question from Dr. Omotule Ambali and Manomito Sakar. What are the perspectives of the discussants on the cooperative trade strategies and advice on standardization of food products to enhance international trade? And then the second question from Manomito Sakar, what are some agricultural marketing mechanisms in Africa? So thinking about some of the standardization of types of products being exported, as well as how does marketing play into this? And could we start with Johan Christian, please?
Yeah, these are tricky questions. Obviously, if we think about marketing, we will probably need to consider the way that you promote your products. So export promotion programs are something that is very important. I know in South Africa's case, we do a lot of export promotion through support by government into new markets, especially nowadays, East Asia, where we're trying to new markets for agriculture and food products. But the standard food shows, etc., all the type of things that one do. So promoting the country and the product goes in hand, but it requires government support and coordination with the various industry bodies. On the first question related to standardization, I think already there's been an effort to bring some harmonization of the trade lines, so to speak, to make sure that we talk about the same product. So this has been going on for some time. But my main issue that I raised in the discussion is really the standardization of documentation, because you can have one set of documents necessary for South Africa into Zimbabwe, but when you go from Zimbabwe into Zambia, you have another set of documents, and that takes a lot of time from the process of the goods movement, and it also delays the transaction at the border. So if we can just harmonize the documents across the continent, it will really be a substantive improvement and help with the delays at the borders. But then on top of that, it's the mechanisms at the border that should also be streamlined to facilitate faster trade and faster moving of goods, especially where goods are perishable, and that's something that needs to be done. But so those are sort of remarks I can provide to those questions.
Thank you, Johan, and I'll pass it now to Doa.
Thank you very much, Julie. So I think on standardization and the value of standardization or harmonization for Africa can't be overemphasized. So I had mentioned before that there were studies demonstrating how serious some of the non-tariff barriers were, and I just want to give you some examples. For example, one study showed that non-tariff barriers on vegetables in Africa amount to a 14% extra tariff. On tobacco and beverages, the non-tariff barriers amount to an 11% extra tariff, and so on. Now, how do you deal with harmonization? Harmonization is complex because you need experts, food experts, sectoral experts to come around the table to have knowledge of international norms, of other regional standards, and to see what is best for Africa and what is also specific to Africa. What are some of the specific challenges that Africa faces and problems that would require standardization? So experts need to come together, but standardization also requires quite a bit of infrastructure. So it requires laboratories, it requires conformity assessment facilities. You know, standardization is not an easy business, and it has to be accompanied with conformity assessment. And neither the standardization nor the conformity assessment should themselves be done in a way that they become barriers to trade in and of themselves. So this is quite a challenging area, but other continents have done it. Africa is doing it every day. It's just that there's a need for agreeing on what can be common to Africa to facilitate the life of traders. The trade facilitation agreement of the WTO is also very important, and a proper implementation of it, speeding up customs procedures when food arrives at a country's borders, so it doesn't rot, it doesn't go to waste, is also an important part of that puzzle. So all of this requires, first of all, a will to do it well, and investment.
Thank you so much, Doa. And can I pass now to Abdoulaye Seck?
Yes, thank you. I think all of the issues you raised are very important when it comes to trying to improve African trade capacities. And I think the issue of harmonization is a very important one, especially when it comes to documentation. And for example, if I can give the example of what we have here in West Africa within ECOWAS. So basically, on paper, the same document should open you all the regional market. For example, you may go from Senegal, maybe transit through Mali and get maybe to Cote d'Ivoire and sell your good. But what we see in reality on the ground is sometimes you may go to one transit country, and then a board official will ask you maybe to go over the same process again and come up with new documentation. So I think it touches on one of the issues raised by I think one discussion, which is what is the real appetite for African countries to really integrate their economies. But I mean, I believe there is a lot of talkings, but when it comes to actually delivering, that's where we definitely come short. And this also touches on the issue of infrastructure, which definitely need to be improved in order to increase our trade capacities. And here we are not only talking about hard infrastructure, but also soft infrastructure, because the issue related to what we generally refer to as trade facilitation measures almost all African countries that have signed up to this WTO agreement. And this is also a very important part of the negotiation of the African free trade agreement. So I think if we are able to at least sustain this momentum we have around this continental agreement, and also make sure that we get the real political will to implement whatever we decide to do in terms of reforms, in terms of improving our productive and trade capacities. So definitely we'll get all the benefits associated with this, the full implementation of African trade agreement. That's what I wanted to add.
Thank you so much, Abdullah. I think we're hearing these similar themes of the importance of this infrastructure, of thinking about these non-tariff measures. I want to pass it to Anton Boué, and then I want to go to Leila. We thank you as well, Abdullah, for the focus a little bit on ECOWAS, to move back to AMO and Northern Africa and think about these questions of how much what potential really is there for the AMO REC to become more integrated with Africa, and why is it so focused on Europe now? And how might that possibly change with the AfCFTA? So I'll pass to you, Leila. First, I wanted just to get a couple more comments from Antoine.
Yes, very rapidly. I just want to mention that concerning trading costs on intra-African agricultural trade, the SILS Institute in West Africa has also designed a database where concerning, in fact, briberies collected by gendarmerie, police, customs official on transportations of agricultural goods within West Africa. And it's amazing because the conclusion is that on average it is a supplementary tax of 1.5% on shipments of goods, on transportations of agricultural goods within ECOWAS, but in fact on specific trade corridors like the corridors between Abidjan and Lagos, the tax is almost 20%. So I think also there is a problem here that governments have to address. Thank you very much. Leila.
Thank you so much, Antoine. And so, Leila, I'll add on one more. Mamoudou Tankari from Academia 2063 has asked, there are several regional economic communities in Africa. What role can they play under the AfCFTA? And so sort of focusing on the AMO region and how it's currently focused on Europe and what the opportunities are for it to become more integrated, what that will take and how that's possible under the AfCFTA.
Thank you, Julie. Sorry. Thank you, Julie, and thanks for the questions asked by the participants. As for trading with Europe, why we're trading that much with Europe, and what does it mean also for the future prospects, for future trade prospects? Then one answer is given by Anderson and Van Winkel, you know, more a theoretical answer, but it kind of illuminates a little bit what is going on. Then the fact that relative trading costs matter more than absolute one, and actually these economies in the area, actually they trade more with advanced and dynamic countries than what they would have been if they were isolated. Then if they were isolated, they will maybe trade more with themselves, but the fact that actually there are some close countries, very advanced and very dynamic, that trigger demand more than what their economies themselves are doing. But the problem here is the following: the fact that all trade policy built around this historical trade, connectivity, infrastructure, even in terms of tariffs, made that it totally underpins this prospect of trade within AMU countries. And by doing that, they totally, AMU countries totally underuse their potential, and the prospect of becoming a platform of trade and investment in terms of value chain between Africa and Europe. This is very important because there is a lot of potential. It's a really big area. There are a lot of complementarities we have seen in the presentation, and there's a lot of things to do. Now, maybe if you want to be positive and optimistic, well, the African Continental Free Trade Agreement could maybe open up with solutions to overcome all the barriers. But you know, barriers are different in the sense it's not only about dropping tariffs. It's really behind the border frontiers, as we have seen. You know, in terms of even maritime connectivity, it's really bad in terms of trade, and in terms of transport, it's also below expectation. Then there are a lot of things to do as for the recommendation, even within the AfCFTA. But when you look to export potential of each country of the within the AfCFTA, we see that still the opportunities lying in Europe are much higher for these countries than what is lying with the opportunities lying in the African economies right now. Then,
thank you so much.
Yeah.
Sorry to interrupt you, Leila. I'm just aware that we are getting right to our time. And I think I just want to also mention that next year, the AATM will focus on the AfCFTA which started its implementation at the beginning of this year. So I think there will be a lot of opportunity to continue this discussion. Obviously, there's a big appetite to talk about how do we transfer from the existing RECs to a continental AfCFTA. And so in order to close, I want to pass to our editor, Shahirzaki, who will give us some closing remarks.
Thank you, Julie. Just to sum up some insights that we found, or some recommendations that we found in the report. So I will classify them in 3 main points. So first, regarding data, as it has been mentioned in the beginning, definitely having more timely data that covers the informal trade and firm level data in order to be able to measure to what extent trade is increasing at the intensive or at the extensive margins, for instance. So all this is really needed in order to have a better overview of trade and agriculture in Africa. Second, clearly, as you mentioned, one of the important, developments that took place early 2021 was the implementation of the AfCFTA, and we are just discussing this with Antoine and Julie, as Julie mentioned. So next year it will be important to assess to what extent the AfCFTA has been successful in promoting intra-African trade. In which sectors, with which partners, compare also ratifiers versus non-ratifiers, for instance. And also it will be important to see to what extent tariffs have been, significantly decreased or not, because even, for instance, if we look at the Arab Maghreb Union, we still observe high tariffs within the free trade area, which is supposed to be, in theory, a free trade area. So it will be also important to see concretely what happened at the tariffs level. The third and final point, clearly, in order to promote intra-African trade, especially for the agriculture sector, digitalization will be a key issue. And this, whether it will be for the customs, for instance, for the automation of customs, in order to speed up the process of clearance of agricultural goods that are perishable, or in terms of having more timely data through automated customs, or making the pre-inspection shipment in an automated way. So clearly, everything related to the digitalization of trade and agriculture will be a key priority, and I think this has to be taken into consideration by the AfCFTA in order to promote trade in general, and especially trade and agriculture, in order to help African countries become more competitive at both the African and the global levels. So I think with this, with digitalization, with data, and the issue of the AfCFTA, I think this will be like the transition between the AATM of 2021 and the AATM of 2022. Thank you, Julie.
Thank you so much, Shahir, and thank you to all of our speakers and discussants. I think we learned a lot today, and you have absolutely set us up for the sequel of AATM 2022 when we will get to talk more about the AfCFTA. So I want to thank all the audience who has joined us today. It was a pleasure to spend this time with you, and invite everyone to join IFPRI tomorrow on September 24th at 8 a.m. I believe that's DC time, for the UN Food Systems Summit side event on funding food system transformation in developing countries, an example from Ethiopia. So we hope you could join us tomorrow, and thank you so much for being with us today.
Okay, bye-bye.